Hi, this is Randy Finney with Right Side of the Chart, and this is a late session update for Monday, October 25th, 2021. What I'm going to do in this order is go through the indexes, quick update on the market-leading FANG stocks, including Facebook, which reports tonight. In fact, we have all the FANGs reporting this week, so big heads up for that, and that's certainly going to affect the markets one way or the other. I'll do a quick update. Well, there's nothing really update on BABA. It's still at that first target, but I'll do an update there because that's one of the last individual stocks trade ideas I threw out for individual stocks. Gold, silver, euro, all that stuff, just brief updates there. Still looks good. Natural gas and oil, definitely want to talk on that. All right, starting out here with the Qs. We are really nothing changed from last week. There's where we were at the end of the week on Thursday. We had that 60-minute divergence. And as I said, we could certainly extend that divergence. That's where I had the lines last week, and I just move them out here. So here's what's going to happen, what I believe will happen. I can tell you what has happened is the divergence has only grown larger since last week. We still clearly have negative divergence. In other words, these indicators down below, the PPO and RSI, are well below the previous highs. So they're making lower highs, prices higher highs, right at that 378.44 resistance. That goes back all the way back to here. We had support in this trading range after our sell signal here, consolidated, broke down below it, bounced, hit it several times. Each and every one of those bounces that was offered, mentioned as an objective short entry for a swing down to T1 and T2. At the time, that was the final target, and then I added a third target, which we reversed a little shy of down there. And so this is it. We're going to report. You're going to have Facebook tonight. I want to go over that real quick and also mention you can find that on the site. When you go to rightsideofthechart.com, go to resources up here in the upper right-hand corner on the menu, and then down here, tools of the trade. You click on earnings calendar. It's going to pull up earnings whisper, and you can go by. Click on the date. You want to see who reports Thursday. I can tell you the market-leading FANGs always report after the close. So you have Apple, Amazon, for example. Click on AMC. Of course, today you have Facebook after the close, and so they're going to kick it off. So number one, I wanted to give you a heads up on that. If you're in Facebook, I was pointed out as breaking out of the downtrend line on the 60-minute chart recently. They're going to report, and it's going to go one way or the other. As I always say, do not read too much into the initial reaction right when they report earnings, because then they're going to follow up with a conference call, usually give any guidance, and it takes the market a day or so to digest that sometimes. But sometimes I've seen the initial reaction, whether it's a rip or a dip, get sold into or reversed. All right, so what we have, again, divergence right here. And this is really, all along, this is about the upper limits of what I wanted to see this bounce carry at. Does not, unless these divergences are taken out, it's not going to change much in the technical posture of things. It has certainly exceeded the typical Fibonacci retracements for a counter trend rally, but you still very much have the potential for a double top high. That would be a run into that level there, about, what is that, 380 or 383 or so, or a marginal pop. Historically, when you get near the highs, the market has popped them, made a marginal new high, and if it does it, it would need to do it soon, and that would probably be the case if you have a big pop out of any of the earnings I just mentioned. Again, Facebook tonight after the close. Tomorrow night, Tuesday, you have Microsoft and Alphabet, and then on Thursday, Apple and Amazon, all after the close. So that is all five of the market-leading FANGs, and so we'll know this week if this scenario, either, again, we have the divergence here. We'll still have it here if it happens soon. In other words, soon is by the end of the week. You can see here if we continue up, we're going to have to take out that peak. So that's what I'm looking for. And again, I just want to state the technical posture has not changed. When does it change? Well, when we get clearly away from that high and take out these divergences, that would certainly be a start. But up until then, again, this is the swing trading time frame. You look for these divergent lows, they're bullish, and you rally. You look for divergent highs, you get corrections. Divergent high correction, divergent low, which we had right here most recently, rally. So that's that. No change there as of now, other than we're at resistance with divergence, and we have Facebook reporting after the close. Let's look at the small caps real quick. I threw that out late last week as set up on Friday. And I showed you the this chart here. This is a 6-month chart, 2-hour candles, and just pointed out the series of divergent highs. There's divergent high 1, 2, 3, 4, 5, 6, 7 over the last 6 months. There's a breakdown today. I did the video on Friday. We're right on the trend line. This is effectively a back test. We're going to close well, actually, let me see. We have half hour to go. So what we need to see ideally is a close down back below this trend line right here, because we broke it today. We're slightly above it right now. That's done nothing but to extend the divergence. But you got to give it, call it for what it is. It's a whipsaw unless we come back through there. Again, you're looking at a 2-hour candlestick chart. There's the candles right there. So we're back in there by a relatively small margin. And sometimes you break down, kick back, and sometimes you just keep going once you break down, and then you have your first reaction later on well below the trend line. So it's still well enough to find trend line that I'm going to you have to put a question mark by the breakdown right now because we're back above it. Absolutely, 100%. In fact, if I didn't have a position, I would wait at this point, wait for a move back down below there, and especially a 60 or 120 minute candlestick close. But again, that's where the technicals are pointing. And targets. Oh yeah, I told you guys I'd give you targets. Let me go to the 60-minute chart, and I did do that for you. I'll try to get a static chart or a screenshot of this one out. So what I'm looking at in the yellow lines, I've colored up the targets. There's some support about 22.58, 35, assuming this breakdown sticks or this whipsaw doesn't stick. That's probably the better way to say it, because we've snapped back above the trend line. So if we close down below there, I'm going to maintain targets of 22.48.50, give or take, and cover a little below that. That's the actual support level. And then this uptrend line right here, it's a minor trend line on the 60-minute time frame right there. You have nice, clean 1, 2, 3, 4 distinct reactions. So I'd look for something along these lines like that. And there's Facebook, the 60-minute chart. Remember, we had the trend line breakout, divergent low, all the things put in these positive divergence on the 60-minute charts. When QQQ did back here, Facebook broke out, started to run, pulled back, but still made a higher low. But again, this is all, at this point in time, you're gambling, you're going into earnings tonight. This thing's going to go either way. Charts, indicate that we're going to rally because we put in the divergent low. And so far, if you just take a step back, tune out all the noise, you have one leg up after the breakout, one leg down. We put in a higher low, and we could have the next leg up, and that would take us to the next target there, 350.86 roughly, 358.83, so forth and so on. But as I shared with you, there's a lot of these divergence, a lot of these 60-minute divergent lows already played out on the other fangs, and this one so far has kind of been lackluster to say the least. And so if it breaks down, then that's it. And that's the divergences are then taken out. If we can go much lower here on the PPO, and more so what it will do to QQQ. So remember, Facebook is only one of the 5 market-leading fangs. Tomorrow you're going to have Microsoft and Alphabet. Then you're going to have 2/3 of them, or 3/5 of them out of the way, I should say. And then by Thursday, we'll really have a good idea, or well, Thursday after the bell, so it's going to be Friday's trading. Really going to have a good idea to see which way this market wants to go. Hopefully it doesn't leave us in a cliffhanger. Sometimes they do that on Friday at 4 p.m. Baba, as I said, Alibaba, nothing really to update. We had this little bullish falling wedge in the breakout and hit the first target here, and we've been consolidating on it. I mentioned active traders could take profits there if you wanted, or if you're not an active trader, you want to just raise your stops. If you took the breakout or anywhere after that, there's support down below about 150, 169.57, and next target's up there around 186. And you want my opinion on it, I'll give it to you, is that, I think the FANG earnings are probably going to be the turning point for this, or a stopping point for this rally based on the divergences, not just on the daily. I told you guys, and I don't know if I really was got to that on Friday. Would talk about the weekly charts, and this is Friday's, or last week was Friday's end of the week close. Let me park the 40-week moving average. That is divergence there, right there, that yellow line, percentage above the 40-week moving average. Let me put up the PPO histogram and just say that nothing's changed. We're still in the red right there. So in other words, we had the PPO histogram flip to red right when the breakdown occurred right there. And as I've gone over in the past, a lot of the trend changes in the market, major corrections have occurred, and that's been a pretty decent confirming sell signal. Again, confirming because first and foremost you need a breakdown of support level. In this case, you had the trend line right here off the COVID lows back in March of 2020. Your breakdown there, and then you hit the secondary trend line right here, bounced again. So this, at least this one, there's other trend indicators out there, but this one is on a sell right now, or bearish, and that didn't change last week at all. I just wanted to point that out, and that also goes into my analysis here on the daily and 60-minute charts, and that's why you can sit here and certainly make the bullish case that we're just going to go ahead and burn through these divergences and rip on to new highs and well beyond, or the bearish case, which is that's it, and this was just a counter trend rally, kind of push the limits of a typical counter trend rally. Or sometimes, like I said, you come in and double top, or it's common to do a slightly higher high, but again, let's just call it a box, let's just call it a range, and that certainly stretches the bearish scenario, but keeps it alive and intact. And that next target still remains 343. So really the only thing that's happened since we started bouncing here and hitting these resistance levels that were objective shorts at the time, they didn't pan out so far. The only difference from shorting like the top of that gap right there at 369.50 is back then, if we reversed and hit T3, you were looking at a drop if you got back into your shorts or added or started any shorts there, about 7.5%, whereas now it's going to take about a almost 9.5, almost 10% drop to get down there. And the precious metals, still one of my favorite trades, particularly gold and silver, like with a slight preference towards silver. And again, we just hit that 24,867 target, pretty good resistance, and we're still well above the primary trend line, as well as this minor trend line, which gave us this little wedge breakout and back test here. So it's been nothing but bullish action in silver so far. Today, the euro was actually down this morning, and silver was hanging in there. Silver and gold were both up, with the dollar bouncing and the euro dropping, which is a good sign because it shows you overwhelming demand or buying pressure when gold and silver actually rally or don't drop much when the euro, here, let me show you what I'm talking about here. Euro E7, there it is. So if you recall, you had this bullish falling wedge, primary trend line there, secondary or benefit of the doubt trend line there, both of them taken out. And then these were the resistance levels / targets on the way up. And so we hit the first one, consolidated, popped up, almost hit the second one there, pretty much consolidated under it. And then you can see today we dropped below that 116.29 level, which I said last week we could do it, and that's fine. If we do, you still have support here at 115 or 116, and that's what we hit. So we dropped, fell down to it. That's where this trading range was. Still support. And again, the fact we had that nice leg down in the euro and it correlated with a spike up in the dollar, yet gold and silver didn't really give up much. And again, that shows, at least very near term, that they still have some pretty nice buying pressure underneath them, the metals that is. And so I still like them. Gold, I showed you silver. And of course, gold is still attractive too. GC, this is a 2-hour chart, same one I've been showing for a while. Uptrend line, downtrend line, breakout, divergent low at support, and just nothing but stair-stepping higher since. Last pullback to the trend line, buyer stepped in and they ran it right up to this next target here. Hit it a couple times. That 1809 target, I've had it here for a while. It is resistance. and resistance. Once resistance is taken out, that's bullish. We could pull back to the trend line and/or that 1783-ish support, or not. Either way, whether we pull back there, that's a buying op if it does, or an objective long entry. As is a solid pop above that, we'll call it 1810 level, up to the big 1838 level. I call that the big level because that is a level we've been tapping on for months now, with several failures there. But every time they sold off, the buyers stepped in. They're probably going to take gold back up there again. And based on the fact we've hit it quite a bit, I think they're going to take it out. So that's it. Well, that's my near-term outlook. Levels to watch, and if things start going wrong, first thing would be a break of the trend line, and then any or all these support levels nearby below. And of course, this is a big one down here now, about that 1720-ish level. And still liking the silver miners and the gold miners as well, GDX, and this is SIL. It's been in a multi-month consolidation range this here, really almost a year long within a bull market, and you've had trading ops, these divergent lows along the way that led to these pops that took you up to the top of the range. This one, and again, I'm viewing this as a false breakdown, aka bear trap. I'm trying to get a circle tool there and circle this whole thing below that roughly 38-ish level right there. You had nice support zone from about 38 to 39, and then we recovered it. So when you zoom in real tight, here's what's happened. We had the downtrend line taken out recently, divergent low, oversold readings right there. Here's a trend line we're walking up. So if you want to have a tight stop, you can use a daily close. You can use an intraday break, but again, if you do an intraday break, it could be a whipsaw. At the end of the day, the candle could print like this. There's the skinny part down below is the shadow. It shows intraday. This is what a candle could look like. I'm kind of enlarging it, and there's the body. As long as that body closes back above or on the trend line, you're still up. But either way, coming up to some resistance here. But again, I look at these individual miners. HL, Hecla Mining, and big divergent low. You see the positive divergences running up, looking good. Goro, GRO, there's a low priced one, big divergent low. Look at that positive divergence recently. A lot of potential. I think it'll hiccup here along the way at about $2, meaning probably a little consolidation there. But ultimately, I think this one works its way back to 250. So, from the recent breakout, that would be about a 58% run in that one. And again, that's low price, so you're going to have more risk in that. CDE traded this one for years. Many times we've had trades on this one, mostly long side trades. And again, a lot of these guys coming off these nice divergent lows at support to boot. With some nice well-defined resistance / target levels overhead. PAAS, another nice silver stock, nice clean trendline breakout, and running since. And again, you don't want to kind of sidestep any corrections or have a tight stop. You have a nice trend line there to trade on that one. BVN and a couple more. WPM, wheat and precious metals, right off that really nice support right around 37. Goes back for the last couple of years. Big level, support, and support. Bounced up, but it's at resistance. And then this is where the longer term outlook starts to change. When that downtrend line gets taken out, the downtrend line, that 47 level, then it's probably off to the races to new highs than this one and a lot of the other miners. AXU, just nice, clean, bullish falling wedge. Right there's your positive divergence breakout, and here's one that's at resistance now, minor resistance. You have a couple levels here right around, let me give you a level if you want to trade it, or if you're in that one, it's right around $1.95 or so, up to about maybe $2. But then next stop is about, I'm going to move that line actually. I'm going to tell you the next stop I think would be up here, closer to about 2.25, maybe even 230. Yeah, let's call it about 230 right there. So there's your levels, 195 and then 230. And then of course, a lot of these guys have the opportunity to run at and maybe even take out these old highs right here. This is that multi-year, or not multi-year, about year-long, what I'm viewing as bull market consolidation right there. Nat gas, strong day up. I need to move this chart over for you. Let me do that real quickly, centered so you can see up almost 12%. Natural gas is just about the only commodity that I know that regularly has double-digit moves in a single day. I can think of no other. Lumber can be pretty volatile, but it's really not uncommon to see nat gas up or down more than 10% in a day. And today's one of those days. Now, what do we have? Okay, so I had to, first of all, I had to roll the futures. So the price levels, and I've cleaned this chart up a little, are going to be a little different, and that's because we rolled from the November contract to the December contract. But every other, they're all the same divergent highs right here, and the divergent lows. You can see that's marked divergent low, divergent low. This was a divergent high. They're all the same as the chart I've been covering recently, which again, this is a 60-minute chart. So, where are we at? The last week we hit this good support level right here, and it wasn't just this very solid price support. You had a reaction, couple reaction highs there, pulled back to it, held there, hit it again. So that we had positive divergence, and then even more importantly, we hit the primary trend line that I've been watching on nat gas, the daily chart of nat gas futures, which I'm going to get to in 1 second. So therefore, a bounce was to be expected off that trend line on the initial tag, and that's what we have. Now, this is the trend line I gave you last week. That's how I had it drawn, and I had 1, 2, back here, a couple reactions, and that was, and then this one here, third reaction there, and a little gap down below. And I mentioned last week, a back test of that would be fairly likely, not unusual to see that. I've added this, an alternative, or what I call BOD trend line here. It comes off the same lows, captures all these reaction lows back here, but then comes in and captures this reaction low right here. And then this way, if you look at it this way, you broke down through it, regained it there, whipped around. Either way, I'm not crazy about the trend line, but I do think it's valid enough because you have enough points, reactions on it there, and you still have a pretty good resistance level. I had this on the old chart. The price level may have changed a few pennies either way, but it's based on these reaction highs right here, and that one there roughly, and that's what we're coming up to. So we're coming up to resistance. We're getting pretty overbought, and most importantly is a long-term chart. Let me pull that up for you. Okay, this is it right here. NG or nat gas. This is an end of day chart. Remember, this is using this one on stock charts. I do like this. It kind of loops the contracts together. It's a nice clean chart. And so for quite a while I've been targeting or mentioning this trend line. Here's our primary uptrend line. It's got a lot of reactions. It's a very steep trend line. We had a pretty sharp correction back to it so far, and in doing so, this is a zoom in, or called a thumbnail. This little area, let me show you right here, is a zoom in of this recent price action, and there's that on the daily chart. You put in a bearish engulfing candle back here. Right there, you fell to the bottom of that candle. It was an intraday hit. You hit the trend line, this primary trend line right here. Boom, and bounce, and we're bouncing again today. And I can tell you, looking at another monitor or the chart we just looked at, nat gas is at about 595 right now, which puts us right about here, right here. So when we close today, that's it. We're still below that resistance there. Again, it is a typical reaction or bounce off the first pullback to the trend line after we got very far away from it on that steep run up. How far we go, hard to say, but I can say, as I've been saying, go back in time and look at each and every time we've had these, especially the extreme overbought conditions. Now, we are in what I believe to be a new bull market in commodities. So what you're going to see going forward, if I'm correct, in the years coming, you're going to see these overbought conditions become more overbought. These, in other words, more extreme overbought levels, like we've seen right here and here. In a bear market, usually once you become overbought, that's when the sellers step in and the downtrend continues. But the fact we're taking out previous highs, you can see here, we've taken out those two reaction highs. And if we take out that one, it's going to be bullish. However, right now we're so overbought, so stretched that I don't see it doing this. I see it best because we just hit the trend line, just like the stock market, maybe a marginal new high. And then, as I've been saying since back here, your next sell signal is going to come on a break below this trend line. We're going to need to see a daily close below that uptrend line there. And I think that meshes with what I showed you on the futures, right? No, I have to roll back to, I mean, those were futures. I have to go back to a longer term chart. Oh, I have one for you. Yeah, we could draw it here as well. There you go. There's your trend line right there on NG. We need to break that trend line. I did a rough draw there. But you can also look at UNG. I know guys lately I've been covering more and more futures than I used to, and I've always been trading those and always covering those as well, but trying to incorporate the ETFs. I know a lot of you guys trade ETFs and ETNs. UNG, let's look at a weekly chart. This is a non-leveraged, and it's been around forever, so it does a pretty decent job of tracking nat gas. Remember, all these commodity tracking ETNs and ETFs, they have to roll futures, and there's slippage and some expenses there. But overall, this one does a pretty good job. And you can see what I want to point out on this weekly chart, a nice clean primary downtrend line. You have reactions here starting back in early 2014, several reactions, another one there, and recently we hit it and we pulled back. And that also correlates with this 22 to 23-ish resistance. I could put another line just above it called a resistance zone from about 22, 23. And again, also extreme overbought conditions. So that's why the charts indicate to me, and we had a sharp run up, and that's the nature of this beast. Like I said a minute ago, nat gas is about the most volatile commodity I know and that I actively trade. You know, one of the few that regularly goes up and down double digits in a day. And it also has another trait, unique trait. It has these very sharp runs, extremely bullish runs, but they're followed usually by equally bearish drops right afterwards. So, you know, if you're new to trading, you're probably saying, oh my gosh, this is the most bullish security I've ever seen. Look at this thing is just up. They buy the dips aggressively. And it does that until it decides not to. And then the rush for the exits is just as fast. So all I can tell you is that we're at resistance. We're at both price and downtrend line resistance while extremely overbought. And the last time we were this overbought was right there. And you can see what happened to natural gas. And that was even before, well before COVID hit right there. COVID hit back here. And that was the drop into the COVID lows. And then last but not least, crude oil. We still have this primary downtrend here on the 60-minute chart. We've been diverging, building divergence. Again, it's not as if the divergence doesn't work. Each divergent high here, smaller divergent highs within this larger divergent high, has resulted in pullbacks, and the divergence just continues to build. So that's the 60-minute time frame. And on this daily time frame, nothing much has changed for a while, other than the fact we are, which I'll acknowledge, we're above that key, what I believe to be a key. It's about 76 right here, this support level on crude oil. But again, we have pretty strong divergences in place, and if history or if history does repeat this time, you're going to see last time we had divergent highs. I didn't have some drawn in here, but you can see that, and now that's where we're at. So they either punch through it, get rid of the divergence, or we'll probably have a decent correction coming up in crude oil. And again, daily chart, you're not going to get your signals right away. You want to zero in on this 60-minute chart. And really the level that needs to be taken out, it's an intersecting support level or dual levels. The uptrend line and about $81, they come in together. So we'll probably work our way down there. If we do, then that's what you want to see for a nice sell signal in crude. And then more importantly, if we fail that back test to that level I just showed you, let me go back there. This is what you want to look for, about 76. So you want to see on the daily chart, especially on a weekly close, a failure back below this level right there. Only other one I wanted to throw in here, I might not have mentioned in the beginning, is sugar. I recently mentioned we had a uptrend line support coming up and some price support. We briefly went a little below, and it's not a hard, this price support level is definitely not a hard line. I'd put a little more faith into this, or a little more stock, I should say, into this uptrend line. And what I like about it here, you can see the PPO. This is kind of quirky. Every time the PPO gets down to this level here, it especially hits this line I have on there. It's about negative 1.2, at least for many months now. This is a 6-month chart. You get there, you can see what happened. There was a bottom, major bottom in sugar. You did it again there. You did it again here, and you just did it again here. So you look for these bullish PPO crossovers at that extreme low, and it's pretty simple technique. We're coming up to resistance. If we can take that out, then maybe we can work our way up here at about that 2036 level. And nice thing about it, if you took it recently, I believe I highlighted that one last week, you can do it with a relatively tight stop below the support, that trend line right there, which I've tweaked ever so slightly since the last update to come in and capture all these lows right here, especially these. And for you ETF traders or ETN traders, SGG, which we're looking at here, or CANE, those are your two ETFs there. So there's SGG, and pull back to the trend line. We did have a divergent high, but remember, commodities just keep going and going. This is a strong bull market on commodities. This is DJP, my go-to commodity ETN I've been looking at because it's well diversified. I've covered this one for months. It has a little of everything: gold, crude oil, nat gas, ag commodities, cattle, you name it. And when we broke the trend line, all we did is pulled back and tested the 25.75. That was my first and earliest support. We kissed it and never looked back. And that is bullish. When you break a primary trend line price channel like that, to have the buyer step in at the first support and run it up there. But we are diverging, and a lot of that reflects, I think, the charts on crude oil, natural gas. Some of the ag commodities look a little better, but again, we're getting a little frothy here on that. I had to point that out. We had divergence before, and we still have that divergence, but we're back above the primary uptrend line. And let's wrap it up here. I think that's it. Let me go ahead and get the video out to you guys. We'll see what Facebook does tonight, and then we'll watch Microsoft and Alphabet tomorrow. This has been Randy Finney with Right Side of the Chart. Have a great day.